As the market pops up on 31st January 2000, the build-up of Ukraine war is a thing of the past. The FOMC announcements is a thing of the past. Yet, volatility in the market has peaked. Will the union budget slated for 1st February trigger the next volatility? The VIX shot past 20 and closed at 20.70. Nifty shed close to 3% week over week. Rupee breached 75 and closed at 75.07 against US. In the US markets, the Nasdaq 100 has shed 5.66% week over week. And the benchmark 10-year US Treasury yield has spiked to 1.84%. While Brent crude rose to $89 per barrel, gold shed close to 3% in a single day and fell from $1,847 per ounce and is now trading around $1,785 per ounce, below the significant 1,800 mark. And dollar index has found a new high and is at 97, above 97. Beyond the FOMC, the US trade deficit for the month of December crossed the 100 billion mark and it came at $101 billion. Central banks have fueled this inflation and now they are up in arms to combat what they have. Suddenly, I am reminded of Thomas Piketty's thoughts in his book Capital. When growth decelerates, the capital to income ratio increases. And the governments will endeavor to project any positive ratios as tailwinds in the economy. The public should not be befooled by such chimera. Piketty goes on to explain that the rising capital to income ratio also reflects the ownership of capital towards the few and manifesting as wider income disparities. And we discussed about such disparities 3 weeks back. The budget can build expectations, but the discerning investors would have already analyzed the dismal performance of the government in achieving the disinvestment targets year after year. One parameter is I have picked up just to highlight one among the factors which could have a check on the fiscal deficit. So, despite a rising capital to income ratio, the government will be forced to borrow more from the market. The nervousness is already seen with the newly auctioned 10-year bond losing 23 basis points value in less than a month and closed at 6.77%. A gradual rise in yield to 7% cannot be ruled out. Have an interesting week ahead.